the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, and of course the sectors and the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares actually moved higher today, tracking gains across Asian markets. So if we look at movements at about 2:18 p.m. Singapore time, the STI was up 1.26%, then at 3,708 points, with a value turnover of 872 million Sing dollars in the broader market. And let's take you through the closing numbers right now. The STI continued that positive momentum, up 1.58% at the close. We're looking at 3,720 points. Now, in terms of value turnover, that's 1.42 billion Sing dollars. Gainers outnumbered losers, 361 versus 179. And top advances for today, we've got for you GMX USD, DBS, UOB, OCBC Bank, and SGX. And top decliners, we've got for you Aztec Global, Asus, LHT, Penguin International, and Southern Alliance Mining. Now, in terms of companies to watch, we have CapitaLand Investment. Now, the REIT manager announced that it intends to launch its first REIT in China to be named CapitaLand Commercial C-Reit. Now, elsewhere from how TSMC logged a forecast-beating 60% leap in quarterly profit to Project Stargate, reportedly weighing a future investment in the UK. We've got more corporate and international headlines in focus. And joining me on the line on a Thursday is Terence Wong, CEO of Azure Capital. Terence, welcome back.
Hi, Tian Tian.
And, Terence, let's start with the Singapore stock market as usual. Of course, a lot of things to unpack on the global front. But how did the STI fare today? Any surprises when it comes down to the biggest movers and the sectors that they lie in?
Well, if you look at the U.S. market closing, which we are closely correlated with, right? You have thought that you will come off because the U.S. markets were down anywhere between 1.7% and 3%. But the entire Asian markets, like what you mentioned, were in the green, and that's because the futures were very, very strong, were relatively strong. They actually went up by anywhere between 1 and 1.4%. So I think that really helped with our local markets. And on specific counters, STI constituents, usual suspects, all of them did relatively well. That's not a surprise. But on the loser front, we continue to see companies like, say, Aztec Global, bearing the brunt of investors selling after they reported a poor set of 1Q results. Yeah. Saw earnings actually come off by 91%. Wow. That's quite significant.
And let's zoom in on some of the companies to watch for today. Terence, we've got CapitaLand Investment. The last I checked, shares were up some 2% because the REIT announced that it intends to launch its first REIT in China to be named CapitaLand Commercial C-Reit. This is said to be a significant move for CapitaLand Investment, but really, how are investors reading into this?
Well, the rise in price shouldn't come as a surprise. Anyway, the markets have been good, and given that CapitaLand is a bellwether, it would increase with or without the news. But of course, the news may have lent a little bit of a kicker. And with this move, we would see a continued growth of its overall funds management platform. CapitaLand has committed to growing this part of their business, and we see the group being able to create a perpetual capital platform in China and tapping a new group of onshore investors. So for Capital, to be sure, that there are now two vehicles, China vehicles, REIT China vehicles. One is the traditional, the CapitaLand China Trust, or CLCT. Mm-hmm. That one, how it differentiates against the new vehicle, is that the investment mandate. CLCT, the older one, covers the Greater China region, including Hong Kong and Macau, while CLCR will concentrate exclusively on mainland China. And I think the successful growth of the ecosystem would help compress yield spread differential between CLCT and CLCR over time.
Now, another counter to watch for today, Terence, is Capital DC REIT. Capital DC REIT's manager posting their higher first quarter distribution per unit of 2.503 Singapore cents, which is up 14.2% on a yearly basis. on contributions from acquisitions and a strong portfolio performance. How far is this in line with the expectations, and how did investors react to the numbers then?
Well, the DPU increase of 14.2% sounds solid. It is pretty much in line with expectations. It is on the back of 23% year-on-year jump in gross revenue of $102 million, and that's lifted by acquisitions of Capital DC Singapore 7 and 8, as well as the Tokyo DC 1. There are also numerous. There are also several contract renewals and escalations. Divestments and ongoing portfolio rebalancing should provide an uplift to margins, with data center demand surging globally, particularly from the hyperscalers and the edge AI needs. We think that Capital DC REIT is well positioned with assets in Singapore, Tokyo, and some key European markets. And despite the lack of a one-off dispute settlement sum in 2024, recent acquisitions and savings in the financing costs will drive earnings growth, we believe, and that will support share price going forward.
Okay. And let's stay in Singapore, Terence, because Singapore's key exports rose at a slower pace in March, with the increase in electronics export offset by the easing growth in non-electronic ones. So if we look at Nodex, that grew 5.4% on a yearly basis in March, easing from the 7.6% increase we saw the month before. How far is this within your expectations, and really what is the outlook ahead given Trump's on-off trade policy, one thing, and a 90-day pause on reciprocal tariffs on some of its major trading partners except for China?
Well, March Nodex growth came in below expectations. That misses both our expectations of about 12% and Bloomberg's consensus of 13.6%. Gains were modest, and that's driven by electronics, about 12% growth on a very low base, with strong contributions coming in from PCs as well as semicon. Non-electronics growth slowed to 3.8%, and that's largely supported by gold ships and pharmaceuticals. So while the 90-day tariff pause by Trump offers near-term relief, I think risks still remain elevated. While we had expected the front-loading effect to fade, we note that Trump implemented this 90-day pause following the imposition of 10% tariff on Singapore. So all these are that there's now space for negotiations. In the near term, this pause may provide some support for Nodex growth. Trade tensions between U.S. and China really show no signs of de-escalating. There are reports saying that China is reaching out to U.S., but all these unsubstantiated. Further, the upcoming U.S. tariffs, or they call it the special focus tariffs on electronics, semiconductors, and pharmaceuticals, that could weigh on exports. As a result, we expect Nodex growth to soften through the rest of 2025. With forecasts being revised down, I believe closer to 3% from the 4% estimate.
I see. Now, if you're just tuning in, when I'm in conversation with Terence Wong, CEO at Azure Capital. Well, across the region, Terence, a couple of things weighing on markets right here in Asia. Investors continue to watch developments in the U.S. and in particular, Tokyo's negotiation with the Trump administration. And we're also seeing that play out with Tokyo leading stocks higher today. Another thing are comments from Fed Chair Jerome Powell warning that Trump's tariffs could force the Fed to choose between either of its two mandates, fighting inflation or fighting unemployment. Could you give us an overview of the situation we're seeing right now? How should we prioritize what to watch in the region for the next couple of months?
Yeah, these are broad questions, so I'm just going to focus on the situation in Asia for the purpose of this question. Current tariff situation in Asian region is complex, with various countries facing very different levels of tariffs imposed by the U.S. So from Newsfeed, we know talk has or is going to commence for Asian countries, with the U.S. trying to seek some form of compromise. Right? What we will be concerned of is the economic data released in the next couple of months for various Asian countries, as the newly imposed tariffs are expected to weigh on regional growth, even with a 90-day delay. We would like to see how these Asian policymakers respond, with whether it is monetary or fiscal measures to mitigate the impact. Singapore, for example, the government has really put together a team to look into this. An eye on depreciation pressures on currencies could happen, potentially accelerating monetary policy, easing even if the current situation actually sees US dollar weakening. Right. Also, we also keep an eye on whether the trade conflict risks driving the global economy into a downward spiral, pushing countries toward and looking at what is it and how does it manage its international trade.
Okay. Now, further away, Terence, Taiwan Semiconductor Manufacturing Company, or TSMC, today logged a forecast-beating 60% leap in quarterly profit, though its outlook has been complicated by U.S. trade policies. Question then, how far can the numbers out of TSMC today be relied upon given possible U.S. tariffs, among other things?
Well, there are several perspectives on this. Firstly, TSMC is raising prices at its U.S. fabs by 30%, and that's driven by a flood of orders from American clients concerned about potential semiconductor tariffs. This price hike will make devices, including AI servers, more expensive, but it's how TSMC plans to manage the surge in demand. In the short term, this could still be positive for revenue growth for TSMC. And during management's call earlier, TSMC reaffirmed its revenue growth outlook for 2025, signaling confidence in navigating the potential industrial and economic fallout from an escalating trade war. This guidance may help reassure investors after a very, very turbulent few days. The market has been rattled by new U.S. export restrictions on NVIDIA chips to China and the disappointing report from ASML Holdings, which contributed to a broad sell-off in the market. And the market remains understandably nervous about the broader impact of tariffs on global economy, particularly in a sector that supplies essential components across nearly every industry. Even before Washington imposed additional tariffs on much of the world, analysts were questioning whether major tech players like Microsoft and Meta will continue buying NVIDIA chips at the same pace in 2025. And NVIDIA, after all, is TSMC's largest customer after Apple. And TSMC stock is down about 20% in 2025 so far. It's currently trading at about 14 times estimated earnings, for forward earnings, below its 3-year average of 16 times, and it's also lower than the multiple for Philadelphia Semiconductor Index.
Okay. And finally, before we let you go, right, Terence, let's take a look at Project Stargate. It is reportedly weighing a future investment in the UK as it explores overseas locations to build out AI infrastructure, according to a report by the Financial Times. Now, Stargate, as we know, is the $500 billion USD data center project funded by SoftBank, OpenAI, and Oracle. Broadly speaking, any initial thoughts? How would you read into that?
Well, Stargate is certainly spreading its wings across key geographies. Earlier this month, we saw reports that SoftBank Group is seeking a loan of up to $16.5 billion to fund its AI investments in the U.S., marking the tech investor's largest ever dollar-denominated financing facility. Given the alignment in AI ambitions, it's no surprise that this drive is extending to Stargate. The Texas site is expected to be completed by mid-2026 without any major hiccups, and the facility will reportedly be housing like 400,000 NVIDIA chips and boasts a capacity of 1.2 gigawatts. OpenAI has previously stated that Stargate could eventually expand to as many as 10 locations across the U.S., and that's just the home turf, right? Now they're talking about striking while the iron is hot and eyeing Europe, particularly UK, for further expansion. This move really underscores the continued momentum in AI infrastructure investment, a trend that aligns with what we've been hearing from many tech players. AI spending is pressing forward, for sure.
I see lots to watch in the coming days and weeks as well. Thanks so much for the insights, Terence. That was Terence Wong, CEO at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Thanks, Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.